Chime. They are in the financial services area and they remind me of SoFi. They're using technology in a really nice look and feel app and website to provide a variety of services for its consumers. The company is growing nice and fast with really nice top line growth of 37%. They have momentum. I think they are tapping into a desire for people to use their phones, use their computers, just do all their banking. And Chime, I think, really hits that particular need. And they have a variety of products that fit the modern time better than traditional banks. Chime went public in June, on June 12th to be exact. And since then, the stock is down 12.37. So it hasn't been one of these stocks that really flew up and doubled in like a week or so. There'll be some others like that, but not this one. The market cap is 8.79 billion and revenues are 1.94 billion. It doesn't look too bad when you compare the market cap to the overall revenue. They don't have any profits yet, so we won't be able to value the company based on earnings per share. Analysts somehow believe there's a 60% discount available on this particular stock. Looking at the forecast these analysts have, there's 12 analysts covering it, and they're all optimistic on the stock. They believe that this stock will at some point be profitable with a 14-cent per share profit in 2027. So investors will have to wait about 2 years to see a profit. And by then, it'll be a forward PE of 173. So that's a pretty high PE for a company that won't be profitable for a couple of years. The value of Chime is not very good. I'm using 2027 earnings per share just to see if I use the earnings that will be produced or are expected to be produced in that year, where would the valuation land? And it would actually be priced 84% too high based on that type of profitability. So I'm not quite sure what analysts are looking at. I am using a discount rate of 10%. Now, book value is another way to invest into banks, and you want the price to book ratio to be as low as possible. 128 is 1.28 is what banks are on average having as a book value. The price to book on Chime is 6.15. That's really high, meaning it doesn't have a lot of value compared to alternatives that you can find in the marketplace. There's lots of banks you can buy. There's regional banks, there's big banks, little banks, very well-known banks. So both of these ratios are showing that Chime is really expensive and has a very little upside potential, in my opinion, compared to the high risk that investors would have to take. Chime would not be a buy for me.